Hey everyone, especially all you CMA inter students out there. We're going to tackle one of your biggest subjects today, management accounting. And look, I know it can sound a little, well, complicated, but trust me, it's not. We're going to break it all down in just a few minutes with some super simple examples. You ready? Let's jump right in.
All right, first things first. What even is management accounting? I mean, really? Let's forget those super long, boring textbook definitions for a second and just get straight to what it's all about.
Okay, so here's the best way to think about it. Imagine management accounting is like the command center of a business. It's all about taking a bunch of numbers, raw financial data, and turning it into something useful. It's the process that hands managers a clear roadmap, the info they absolutely have to make smart decisions about where the company is headed.
And this is probably the most important distinction you need to get. Think about it like this. Financial accounting? That's like driving while looking in your rearview mirror. It tells you exactly where you've been. It's all about the past. But management accounting, that's about looking out the front windshield. It's all about seeing what's coming, navigating the road ahead, and deciding which turn to take next.
And here's the key thing to remember. This is an internal tool, okay? These reports aren't for the public or for investors or the tax man. Nope. This is strictly for the people inside the company, the managers. It helps them do three really important things. Plan what's going to happen next, control what's happening right now, and of course, make the best possible decisions for the business.
Okay, so that's the theory. But theory is, well, it's just theory, right? Let's see how this stuff actually works in the real world. We're going to walk through a couple of classic examples that show these ideas in action.
So, first up, the pricing decision. Super common, right? So picture this. You've got a company, and they make water bottles. Now, how do they decide what to charge? They can't just, pick a number they like. No way. They need solid data to figure out the perfect price, one that people will pay, and one that actually makes them money.
All right, let's figure out the cost piece by piece. First up, you've got the actual materials. The plastic, the cap, the label. Let's say all of that comes out to 20 rupees.
Okay, next you've got to pay the people who actually make the bottle, right? The workers on the assembly line. That's your labor cost. So we'll add another 10 rupees for that.
And then there are all the other costs of running the factory, the electricity, the rent, that kind of stuff. We call those overheads. Let's add another 5 rupees for those.
So you add it all together, 20 for materials, 10 for labor, 5 for overheads, and you get a grand total of 35 rupees. That's it. That's what it costs to make one single bottle. This number is your foundation. Okay, now we know our cost is 35 rupees. Now the managers can make an informed decision. They look at the market, they look at their costs, and they decide, you know what, we're going to sell this bottle for 50 rupees.
And boom, there it is. Simple math, right? Sell for 50, costs 35 to make, that's a 15 rupee profit on every single bottle. See? Management accounting gave them the exact information they needed to pick that price with confidence. No guesswork involved.
Okay, let's try another one. This is a classic, the make or buy decision. Imagine a mobile phone company. They obviously need chargers for their phones. The big question is, should they manufacture the chargers themselves, or should they just buy them from another company? Well, management accounting puts the numbers right in front of them. If they make it in-house, it costs 120 rupees per charger. But if they buy it from a supplier, it's only 100 rupees.
Well, when you look at it that way, the decision is pretty much a no-brainer, isn't it? By buying the charger, they save 20 rupees. Now, that might not sound like a lot, but think about it. Multiply that 20 rupees by, say, 1 million phones. That is a huge amount of money saved, a massive boost to their profit. And it's all thanks to one smart decision, guided by the data.
So you see, whether we're talking about setting a price or deciding to make or buy something, what's the big idea behind it all? What are we really trying to achieve with all this analysis?
It really all boils down to these 3 key objectives that all work together. First is planning. That's all about using the data to look ahead and set goals. Next, you have control. This is where you check your actual performance against your plan to make sure you're not going off the rails. And finally, all of that leads to decision-making, which is just using all that great info to make the best possible choice, like in the examples we just saw. Now, to pull all this off, managers don't just rely on gut feelings. They have a whole box of special tools. And guess what? These are the exact tools that you're going to be learning all about in your CMA Inter syllabus. Yep, this is basically the management accountant's secret weapon kit. You're going to get really familiar with all of these in your studies, things like budgeting, standard costing, and marginal costing.
Every single one of these is a powerful technique for digging into the business and helping make those game-changing decisions.
Okay, wow, we covered a lot there in a short time. So before we wrap up, let's do a super quick summary just to make sure the most important points really stick.
So if you take away just a few things, make it these. 1. Management accounting is all about helping managers make decisions. 2. It's always looking forward, focused on future planning. 3. It takes financial data and uses it for analysis. And 4. The whole point, the end goal, is to make the company more efficient and more profitable. That's it in a nutshell. So as you're hitting the books for your exams, just remember, you're not just memorizing formulas and definitions, you're actually learning how to make these huge, important business decisions. So the real question is, which one are you going to master first? Pricing? Make or buy? Let me know. Thanks so much for watching, and seriously, all the best with your studies.